Yeah, it's been kind of interesting the last few weeks, kind of thinking about history and nostalgia and so forth. And I'll bore you a lot with things, but I first came to Edmond in 1963. I was from Ponca City. I had to work to go to college, and so it was much easier to get a job if I came down here than it was to go to Stillwater or Norman. This was way out in the country. This was way out in the country back in 1963. Broadway extension ran from Britton Road to 63rd Street. That was the extent of that. I used to drive a school bus here. I went from 2nd Street, Memorial, from Bryant to 1 mile east of I-35, picked up all grades of the Edmond school system on one bus. In thinking about this, OMAG, I guess, is 42 years old now. When I left in January of 2000, I'd been with the program 20 years and 2 months. At that time, that was the longest time that anyone had ever served in public entity risk and benefits pools. 500 pools in the United States at that time, but I had been in it longer than anyone. There was a fellow up in Minnesota, and I had 2 days service on him. Many people have had much more service than that. I think Pam had, 38 when she retired, and so nowadays we have many. But as most of you probably know, pooling itself started in 1974 in Texas. Do you know why? In Texas, they passed a statute putting public employees under workers' compensation. And the insurance industry said, you want us to insure people who run into burning buildings? You want us to insure people who shoot at people and who get shot at by people? Are you crazy? We have no idea how to underwrite such a risk. So here comes January 1, 1974, and nobody has stepped up to say we'll provide workers' compensation coverage for public employees in Texas. So the Municipal Association, the County Association, the School Boards Association there got together, looked, found they had what was called the Interlocal Cooperation Act in Texas, and they used that to form the very first pools that went into effect on January 1, 1974. OMAG, as you should know by now, was formed in 1977, very shortly after, but it was formed as a health benefits program, not as workers' compensation. I had set up the first league insurance program in the United States at OML back in 1972 as a fully insured health program with First Pyramid Life Insurance Company out of Little Rock, Arkansas, doing the coverage because small towns, particularly those with 5, 7, 10, 15 employees, had a very hard time getting insurance. So we thought if we could create something that would work. That functioned until 1977 when it was folded down. It was called OMLGIT, Local Municipal League Group Insurance Trust. It was organized as a trust. Then the OMAG, the Oklahoma Municipal League Municipal Insurance Group, was formed in 1977 to do group self-funded health benefits. That was an entirely new concept back in the late 1970s for an employer to provide their own insurance or for groups to be able to do that. And there were very few vendors around. We used a company out of Minneapolis, was hired to set up the employee benefit program. It gets tongue-tied them because they were called employee benefit plans and employee benefit claims to do an employee benefits program that we had. So it started out as health. For those of you, I'm sure most of you recall by now that Stephen Reel was one of the 2 people who signed the agreement establishing the OMAG. Well, he was city manager at the village. Now, thinking about the culture I really have to tell you a little bit about myself to talk about the culture, because I think my background had a lot to do with, what we did in setting things up. I mentioned I came from Ponca City. My father thought everyone in government was corrupt. There was no official in government that wasn't corrupt. So I grew up with that environment. I became a reporter for the Oklahoma and was part of what we call the Metro staff. And we covered local governments from Guthrie to Norman, from Shawnee to El Reno, every city and town in that area. And I began to learn that there were a lot of very honest, hardworking people who were just trying to do the best they could on behalf of their fellow citizens. And I decided, I'd like to be a part of those people. I'd like to be a part of making those things happen. And maybe my dad might finally be convinced that there is at least one honest government official. He died in 1999, and I don't know whether I ever convinced him of that or not. But I think he was proud of what I had done during that period of time. That kind of brought me into local government. Also, starting out, I worked as an assistant city manager and a city manager. I was assistant city manager at Ponca City. I was city manager at Guyman. I worked for the Municipal League for 2 years. I set up the labor relations program that they have down there now, set up the newspaper that they have, teaching the Fair Labor Standards Act, the Open Meeting Act, and the Public Records Act. We didn't have those things when I started. We didn't have sales tax, by the way, when I started in local government. We operated off of water and electric revenues, if you had an electric system, or a gas system, as we had when I went to Guyman. And one of the first tasks that I was given at Ponca City was to try to pass a sales tax. So we passed the very first penny sales tax up there. And then later on, came the open, when I went to Guyman, I went out there over Labor Day weekend, so I was reading the minutes and so forth. And they would meet 3 and 4 times a week out there. I thought, how do you do that? Because at Ponca City, we met every Monday, but we only met, on those Mondays. Well, back in those days, the mayor would be having coffee with somebody in the morning at the coffee shop, or maybe a local car dealer, and he said, man, I traded the yesterday for pickup. It would be great for you guys. Well, he'd get on the phone. He'd call 2 other councilmen up, get a vote of 3, at least 3, which is 3 out of 5, to buy that, and then call the city clerk and say, we had a meeting of the city council. What we've done. That's how they did that. I think medicine makes my mouth go dry. Back in those days. But with the league, then I went to Union City, Tennessee for 5 years out there. When I was at Guyman, I was on the Municipal League board, and when I was in Tennessee, I was elected to the Tennessee board. So these are all influences that were affecting me when I had an opportunity to come and be a part of building OMAG, and particularly the league influences. Really learning about the extent of local government beyond just what I knew at Ponca City or at Guyman. Then I was fortunate to be asked to come back to be with the Municipal League again. In 1975, we had we call it a strike. It's called the Blue Flu. No, 1978. Oklahoma City Police Department went on strike because municipal officials weren't taking the collective bargaining, the meet and confer legislation seriously. Paper called the Blue Flu, the Blue Flu back in those days, and so I was asked to come back to help cities and towns in a position to do their collective bargaining. I've been here about 2 months, and Ryder, who was the executive director, said, "Oh, by the way, we have this little insurance program over here, and I need you to kind of, take care of the minutes and see that they get an agenda and have the board come together and so forth." That was the extent of how I got involved in OMAG. So we had the health benefits program. At that time, it was a major medical program. We later switched to PPO and then to managed care. We had employee benefit plans, Richard Dunlap and Bob Winchell out of Minneapolis that I talked about that were a part of it. Over the years, they were kind of moved to the side. The mutual insurance administrators were brought into the program. I think the biggest error we made was changing from a major medical program where the program paid 80%, you paid 20%, to the PPO model. And that was I think everybody was trying to do what they could to benefit employees at that time. Trying to pay that 20% of all your medical costs was pretty good amount to bear. So could we make it less costly for the employee? Well, basically what we did was to remove the employee from even being concerned about the cost and so forth, because now the employer was paying 90 to 100% of the cost. So why worry about the cost? And we came out with a prescription card. So they could buy a prescription for $1.50 instead of having to pay $10 or $20. Well, then we all got to be like I am, and that is, doc, just give me another pill. Don't ask me to do anything, just give me a pill. Take care of it, because it doesn't cost me anything to get another pill. And if I did what you wanted me to do, well, I'd have to allocate additional resources. I don't have a whole lot of time to go into that, but it was a cascading deal as to the cost, and I think employees, because we don't have much invested anymore. So we just go along with whatever we're told. It's not, well, wait a minute, it's going to cost me $100. I want to know what are my options. Right now, if it's not going to cost me anything, I'm going to, yeah, send me over there. Let me go. We struggled with that program the whole time I was here. I always said it brought in 30% of the income and required 70% of the time of the staff and of the board. And then eventually, does anybody remember when that was folded, when it was terminated? Bill, do you remember? It was after I left. But,
yeah.
Shortly, not too long after Pat came.
No.
We were,
Yeah.
98, 97.
No, he left in 2000, so it was after, it was when I was here.
It was 2005. But, it went along, but it just became so difficult. And you get in that death spiral, the rates go up and good risks go away and so forth. But the whole thing was, the program was oriented to those municipalities that had 5, 7, 10 employees. We had some that were larger, but it was very difficult to get big communities in. Shawnee was in for quite a while. Edmond was at one time, as I recall. But very difficult to have. But that's what this program started out as. And it's the only program I know of in the United States that started out as a health benefits program. Most everyone else started out as liability or workers' comp over the years. At that time, Gene Hansen, when I first came involved, Gene Hansen, a lady was mayor of Cleveland, was the chairman of the board. And I mention that from this standpoint. This is now 42 years later. Think about the people you're going to have an impact on 42 years from now. For those of you that are out there young enough, lady, that will be remembering what the impact you had on them many years later. I've never forgotten. And she was, in fact, deeply committed to the smaller towns in the state to try to provide something for them. And at that time also, really was driven home to me the fact that, what we're doing collectively is only what individual cities can do on their own. We only have the power that they have. They could self-fund collectively as a group, we were self-funding, an entirely new concept. Individual self-funding had been around for a long time. Now, what do you notice about it when I say that term? I say self-funding. What does everybody else say? Self-insurance. There's a big difference. And I testified in a number of lawsuits about the difference between self-funding and self-insuring. It's easy, and very few people understand that distinction. But if you get in the right court case, it makes a big difference. So you've driven home to me over and over again. We're only doing what individual cities and towns. One person I wanted to mention, talking about the health benefits plan before I come off of it, Bill Routon. I don't know if many of you know Bill. Bill was a long-time city manager here in the state, and probably managed 7 or 10 different towns. He moved about every 2 or 3 years. And one of my favorite phrases in life is, few people are wise enough to value useful reproof over treacherous praise. Few of us will learn from our critics. We want to hear from those who praise us. Well, Bill was one of our critics. And I've got a picture of it up here someplace at one of the OMAG conferences. We could never do anything right with the health benefits plan. Now, he joined the health benefits plan in every city he was in. He had to join the plan. We could never do anything right. And the principal example of that came to me when we came out with the prescription card program. And that was, again, designed to make it much easier for employees to be able to afford prescriptions, because instead of paying 20%, they would only have to pay $1.50 for a prescription. But Bill was astute enough to know that to do that meant that the premium had to go up. And it was roughly $5 a month per employee more to have a prescription card than it was for them to pay 20% of the prescription. But the employer was going to be paying that additional cost. But he was an employer as a city manager. And Bill really chewed me out one time at a city manager conference, right after we had adopted that. And his argument was, we didn't give him a choice. We mandated it. He said, you got to do this. Well, by and large, that's what we have been told as the board and as the staff that we had to do it. But I went back and I talked with our people about, do we really have to require everyone to be in it to make it work? And they finally said, well, no, you don't have to. So the next year, we gave the option. If you didn't want the prescription card, you didn't have to have the prescription card. No one ever took up that option. Not even Bill. But we gave him choice. We gave him choice. We didn't say, you have to do it this way. And that became very important in a lot of other things that I think are part of the way we try to do things here. And try to look, that you do, try to look at, what are the real needs and concerns of the city. In 1978 or 79, the legislature passed the Political Subdivisions Tort Claim Act and did away with sovereign immunity. And prior to that time, we only worried about those things we did that were private business like. We worried about our utilities. And we debated, was a swimming pool a public entity or private? What's the term? Proprietary, non-proprietary, and governmental and non-governmental functions. But proprietary and non-proprietary. As to what was the legal liability, because otherwise the king could do no wrong, but we could do no wrong as far as government. But the court said the legislature said we're going to reorder this process a little bit. Actually, they've been goaded by the legislature into doing it, and been told you need to re-examine this and come up with a process. So in 1979, which is when I became involved with the program, I came back from Tennessee in 1979 formed in 1977, 1979, I come back, and a process is underway by a group of municipal attorneys to come up with some kind of a program that can provide insurance protection for cities and towns under this new Political Subdivision Tort Claim Act. And initially, the idea was we're going to protect the governing body members for E&O coverage, the employer liability coverage. But every meeting, somebody else had a different interest that they brought up. And then, so the agenda got bigger and bigger and bigger. The program got broader and broader. And finally, we kind of had a coverage document people thought they could live with. Two people involved very much with the program back at that time were Jack Floyd and Jill Kennedy. I don't know if any of you know those names or not, Floyd Kennedy and Associates. They had both been on the staff of the National League of Cities. Jack had been the assistant director there. Jill was on the legal staff. They were retained before I became involved as consultants to work with the committee on developing the program. Eventually, they were retained to be the first administrators of the program. And Jill and I had a lot of basic disagreements, and that to Jill, you booked the revenue the morning after the city council said, we're going to join the plan in 3 months. And you booked that revenue the next morning. And you didn't expense anything until the check cleared the bank. That's when it became an expense. And so the numbers looked pretty rosy for a while. We started the program with less than $300,000 in annual premium or annual contribution commitments. We had not collected. And I think that first full year of the liability plan, we had $327,000 in total income, providing $1 million in coverage per municipality. I had hair really when we were doing that program. And so Floyd Kennedy was in the program for quite a while until really things just weren't working well. And we began to look around. That's when Charles Caldwell and Fred S. James and company at the time, that was back during the alphabet days of the brokers with Fred S. James, FSJ, Frank B. Hall, Rollins, Burdick Hunter, Sedgwick, Marsh McClellan, M&M was the company back then. A lot of mergers down. Today you got Marsh pretty much, and that's about it. Sedgwick is doing that, and Sedgwick exists as a claims organization, but that was a spinoff out of Sedgwick bought James, and Marsh bought that. So they were brought into the program. Charlie, by the way, we were still working down at the Municipal League office at 23rd Street. Charlie and his organization was about 4 blocks west on Northwest 23rd Street. He had a brokerage and was in partnership with the mayor of Ada, who was on the city councilman, but he had an insurance agency. And Charlie had good connections with Lloyd's of London. He had a teletype machine like we used to have at the newspaper in his office down there that they got the teletypes back and forth to London. And he woke up one morning and found out that his partner, the mayor of Ada, had absconded with all of his money. All of the money that the company had. And that's the last time Jeannie, Charlie's wife, ever signed an agreement with him to agree to let their assets be used to buy a building. And just devastated Charlie. But I went to Charlie and I told him we had hired him as our broker. We had not really hired that company. And he managed to find another place he could work at for a while. And then he found some friends that took about $5 million. Got him started again, and wow, look what he's done with that company since that time. And with OMAG now since 1985. Picked up the Fred S. James organization, was out on Northwest Highway, really to do their marketing activities at that time, and then claimed with some of the pictures here. Got back Poe, that worked over in the Tulsa office with Mary Ellis on claims. The difficulty that everybody had back at that time in creating liability programs was this effort of doing away with sovereign immunity and changing the tort structure for local governments and state governments was happening nationally. It wasn't just in Oklahoma. And that's when I learned that Lloyd's in London, they don't look at Oklahoma, they don't look at Oklahoma City, they look at North America. It's whether or not they're going to do business in North America, not whether they're going to do business in a given state or not. And a lot of the large companies in that regard. The industry was not convinced that the exclusions and exemptions and tort caps that were characteristic of tort reform legislation were going to hold up. This is all new in terms of some of the exemptions and exclusions that we were given, and then these tort caps, $25,000, $1 million. And the very first test of that across the country occurred in Oklahoma City with the explosion of a boiler at Star Spencer Elementary School in Oklahoma City. It killed, I think, 7 people were killed in that, students and 1 teacher. And $1 million was all they were going to be able to collect for those 7 lives from the Oklahoma City school system. The Oklahoma Supreme Court said, yes, that's all you're allowed to collect. Now, they did collect more on behalf of those people from the boiler manufacturer and probably some other people, but from the school board, that was it. And around the country, courts have thrown out or modified various exemptions or exclusions in tort acts. But I know I've been out of the business for a while. I don't know if they've ever thrown out a tort cap in any state. They have respected the legislative decision in that regard. So had it not been for that fear, I think the insurance industry probably would have stepped up and gotten into the liability business, but they just did not believe in that. We had no choice. We didn't have any choice but to do it as cities and towns. Now, back in those days, I really thought it was only temporary. I knew the health business was probably going to be around for a long time. Well, the insurance industry surely going to wake up and realize that we're not as at a risk, given the tort caps, given the exemptions and the exclusions, as they think it was going to be. And surely they'll come around and change their mind and come in. Well, they did for very, very large cities in certain parts of the country, but never on a very broad basis, never a real threat from the major insurance industry as far as pools were concerned around the country. And they were blossoming. I mean, just going like crazy. So that by 1999, we had over 500 pools in the United States alone. So the industry there was very concerned about coming in. One of the things that we looked at here at OMAG in terms of getting into things was how to control the losses. As a city manager, I had experienced loss control inspections by our insurers who would come in and go around and come in and meet with me and tell me what was always wrong and so forth. And then I would have everybody address all these things, and then 9 months later when they came in, those would all be done, but they'd have a new list of things to do. And then they would leave my office at the city and go to the lumber yard and do their inspection there. Then they'd leave there and maybe go to the grocery store and do their inspection there. Because what were they doing? They were inspecting against OSHA standards. That's a safe way to do it. You got these occupational health and safety standards, go in and see them. But if you go through that list, it has very little to do with the losses that occur in cities and towns. Those are mainly factory-oriented type things and so forth. And I don't know what your experience is now, but back in my time, 70% of the losses were employment and law enforcement. And 30% was the things that loss control people from the private insurance industry did. So how do you loss control in employment and law enforcement? Billy, who do chiefs respect?
Do they what?
Who do they respect?
Each other or what?
Each other. Let me tell you, you try to go to the chief police and tell him how to do things. You ain't getting no place. You ain't getting no place at all. And I was the first civilian member of the Oklahoma Association of Chiefs of Police. I happen to have some really good friends who were chiefs of police. My best friend was Bob Hicks, who was the director of the OSBI. He was the former chief at Chickasha and El Reno. And he and John Wessel were able to help me or help others, give me an opportunity to come in, because I was saying, I need to know what you all are thinking so that we know how to respond to your needs from a coverage and a defense standpoint. And so I was involved in that. I don't think you're not involved like that. John was, but there is a relationship, I think, kind of now as you have going on. We've built on that basis. And the Oklahoma Law Enforcement Operations Bulletin, which no longer, it hadn't been around for a long time. But that was one of the things that Bob Hicks, my friend and I, came up with, again, as a way to how to get to the law enforcement people. Well, the Oklahoma State Bureau of Investigation is pretty much the premier law enforcement organization in Oklahoma. Most everybody that's a law enforcement officer would like to be with OSBI. And so we got this idea that what if they came out with a bulletin on a regular basis to the law enforcement community addressing concerns of a liability standpoint. And it was coming from a law enforcement organization to others. So we created a board with the District Attorneys Association, the Chiefs of Police, the OSBI, and a couple of others. It was an editorial board. And OMAG bought the OSBI a desktop publishing system and gave it to them. We funded the cost of an intern to their general counsel to free her up to have more time to write these publications. And that was the birth of the Law Enforcement Operations Bulletin. And we used to have police officers come into our office who said they needed to get a copy of that because their chief wasn't distributing it to them anymore. The deal was if you had 50 officers, we mailed you 50 copies of it. The idea was to put it in the hands of individual police officers. And it was oriented to those things that they were dealing with out there that created liability back for the agency or for the city and so forth. We had people, when we were down on Lincoln Boulevard, come in because maybe the chief didn't want them to know. That never happens, does it? No, sir. That never happens at all. But that was part of the deal. So it came from a respected law enforcement organization. Well, now you got two law enforcement, really fine law enforcement people as part of the program. Gee, Billy, you were a captain, I think, when I first met you, probably.
Probably
Maybe
was.
it's hard, I don't know. Like, Kevin, I didn't know Kevin, back when, he was at the city. But, you know, those were losses, those were the areas we had to concentrate on, and the insurance industry, did not know how to deal with those kinds of issues. They didn't have the people that could go in and talk with, law enforcement. Now, dealing with the governing body official, that's a whole different thing. You know, and particularly when you're having to figure out how to lost control with somebody that gets elected as mayor and comes in at his first meeting and fires everybody. You know, how do you get to that? How do you get to that guy? You know,
Yeah.
and you know, those were really the tough kind of deal. The people who don't really understand how local government is supposed to operate. Now I'm going to switch now to a kind of a defense deal as to what we were doing from a defense standpoint. What I recognized as we were going into this, and Stephen had joined the program on staff from fairly early, about 1980, 81, I think, when he was brought on full time. He was a part-time general counsel prior to that. Was that we were dealing with a new law, the Political Subdivision Tort Claim Act. The Governmental Tort Claim Act was what, 85? About that period of time, I think. So it was just cities and towns and schools and counties. But we were dealing with a law that was new. We were dealing with an operation that claims people really didn't understand, local government. Now, there's a lot different than private business. You know, the difference I always tell people that are coming in as governing bodies is to keep in mind, I think Dillon's rule is an old deal we talked about, but that, you know, in private business, you look for, you know, what prohibits you from doing something. In public business, you look for the authority to do whatever it is you're going to do. So when we were first looking at claims people, they were coming, you know, with this private sector. Then we're also dealing with a lot of city attorneys who know very, very little about municipal law. They don't teach classes in municipal law in law school. So, you know, it's something they get that by on the job training. Matt and I do a lot of work getting the city attorney at Craig to understand what the law is on municipal government. So we had claims people who didn't really understand our operations. We had a new law. We had municipal attorneys that certainly didn't understand the law. But we had a plaintiffs bar that was really studying very, very fast to learn all these things. So I decided early on in the liability that when things went to litigation, we were going to put it under Stephen's authority as counsel. He had practical experience as city manager, knowing what was done there. He had the legal background. And so we said if a case goes to litigation, Stephen's going to be in charge of it, not the claims people. And Mary Ellis and George Poe and a few others had a little difficulty with that at first because in most organizations you do the claims, so you do all the way through litigation. And we felt that it needed to be attorney to attorney, particularly as the new, I'm trying to remember the exact term we were using back then, but as the experiment was taking place within the federal court system as to how to get faster resolution of cases. And Oklahoma was the 10th Circuit in Oklahoma was one of the test venues for these early settlement, or what's the term I'm trying to think of?
Alternative dispute resolution.
Dispute resolution processes. So settlement conferences, summary jury trials, arbitration, whole 5 or 6 different kind of things were being experimented with, and so attorney involvement became pretty important. The reason you're CEO is because I was the administrator of OMAG, And when I would go to settlement conferences, the judge said, but you're supposed to send somebody that have authority. You're just the administrator. And I want somebody here who's got the authority to act on behalf of your agent. So I told the board, I need to be able to go there. If I go there as CEO, the judge ain't going to say it. I want somebody here who has the authority. I'm the CEO. That's why you're CEO. I'm executive director.
I wonder why that was that way.
That's why it's that way. Because that made an impression on Judge West. So Judge West, I'm the CEO. Then he didn't say, well, I want somebody here who's got the authority to settle this thing. So we got into that as the way, and that was very different at the time. Have the attorney responsible for the cases. And then the cases kept getting more and more as we expanded the program over the years. It got to be really a lot more than Stephen could keep up with. And I did some analysis, and I went to the board and I said, if I can hire another attorney and I get the right one, I guarantee you, took a risk here. We can reduce our litigation costs by 3%. And it was going to cost us maybe 0.5% to hire someone. And Stephen looked around and talked to a lot of people and found a young guy in the municipal counselor's office in Oklahoma City, and Jonathan Wood. And we invited Jonathan for lunch one day at the old Beacon Club on the First National Bank. He'd never heard of OMAG. He had no idea who we were or what the organization was. But we had a good meeting, and we ended up hiring Jonathan. And 3 years later, I went to the board and I said, well, I guaranteed you we'd reduce the cost by 3%. We reduced it by 6% by having the second attorney, because in the cases, and they were both dealing with about 120 cases at that time. So that's how Jonathan ended up coming. In 1984, we were looking at staff. Well, let me go back to stay on this just a minute. Another thing we tried to do, because of the character of municipal governments, was to look at settling claims different than on a cash value basis. I became convinced that a good number of claims were political in nature rather than a real harm basis. That I looked at too many cases in which there had been a political relationship or something had gone haywire back here. And I can't remember the name of the town now, but there's one town out west in Oklahoma where we were involved in some litigation there. It was actually a trespassing or a inverse condemnation kind of action and so forth. And the more I looked into that case, I found that there had been this long simmering dispute between this family and the mayor's family over the years. And we ended up settling that case by naming a park after one of the plaintiff's family members. No money changed hands. But that park named that way. In Seminole, Dave Harris, Bill's mentor, a long-time board member here, first person to serve 18 years on the board, a dear friend of mine for many years, was city manager at Seminole. And they had a young lady on the police department there named Ramona Arnold, who was married to a firefighter. But she was harassed by a lot of the male officers. They had her life mission. And they were not covered by OMAG at the time. She sued them and got a judgment of $327,000 in that area. In excess of 300, I know for sure. And some money to put in her pocket. It created a lot of strain. And she and her husband got a divorce. He was still on the fire department. She was still on the police department. Dave was there by then. They had joined OMAG. But they didn't learn anything. And they kept harassing her. Kept making her life difficult. And her life was difficult for her. And particularly with her husband being in the department over there. So they continued the same behavior that they had before. So again, she sued the city. Same circumstances as before. But in that process, I had learned that Ramona's father had been an Oklahoma City police officer, and he had retired with 20 years service. She had 16 years at Seminole at the time. And through a little bit of other work, conversations during deposition hearing, I figured out that what was important to Ramona was to retire 20-year service. That was the most important thing in her life. Well, her life was miserable. And it was a miserable circumstance for her in the Seminole department. And she knew it. But she wanted that 20 years. And we worked out a process to where she gave up her badge, she gave up her gun, she gave up her commission, she gave up her uniform, she took another job, but she remained on the role as a police officer at Seminole for 4 more years. We paid in her pension contributions that would have been paid had she remained on payroll at that time. And that's all she got. She got her 20-year retirement. And that was what was important to her. So the beauty, I think, of local government is that money is not always the issue. Unfortunately, in today's situation, you probably can't do those kind of things today that we were able to do early on back then. But they laid the foundation that people had trust in OMAG. They knew OMAG was going to listen, as Bill Roughton had taught me, as to what their real concerns were and what were the real influences that she had. In the liability program also, one of the first things we faced was what to do about evidence of insurability, little deals that we all get from our insurance company to get our cars tagged and so forth. Cities and towns have been getting their cars insured for years prior to the time of OMAG creating its program. But because one of the things I'm always going to do is look at, okay, what is the governmental aspect of this? Was that the statute that we all think says we have to have insurance on our cars is a financial responsibility statute. It just says if you're going to own a vehicle, you have to have financial responsibility, pay for damages you can have. Well, very few people have sufficient financial resources to be able to do that without insurance. So then you get insurance, and you get a little sticker that you should show that I have financial responsibility as a driver. But municipalities, in our instance, were exempt from that law. Didn't apply. We had the ability. There's a thing I always say to people about settling claims and so forth with municipalities. We're not going to go bankrupt. You can go bankrupt. Cashin has gone bankrupt. Wapanucka has gone bankrupt. But you don't escape your financial responsibilities when you file for bankruptcy as a governmental entity. And we're not going to get up and move out of state overnight. And I've had a few friends that have done that to get away from their liabilities. Pack up in the middle of the night and move to another state. We're not going to do that. And we have the tax levy. And I learned that from Oklahoma City and Tulsa many years ago, particularly in workers' compensation, where Richard Bingham was the safety director for the city of Tulsa. I felt so sorry for that guy. He was supposed to, bring safety to the workforce and so forth. He couldn't get any money from the city council. He couldn't get any respect from people, but he had a job because they They thought they needed to have a safety director. Where Oklahoma City had a very viable program. But in Oklahoma City, they budgeted for the better part of their workers' compensation claim. Tulsa took every claim to the tax levy. Every claim ended up being reduced to a judgment and put on the tax roll. So why spend money on safety? That's going to cost us, was what the city commission said there. It didn't cost, workers' comp didn't cost the city of Tulsa anything because it went on the tax levy. And you could pay millions of dollars in tax levies in Oklahoma City and Tulsa and make a 2 or 3 cent difference in what you and I, as a taxpayer, are going to pay. And but in Oklahoma City, really faced up to it, budgeted for it. I'll tell you something else I hadn't thought about. But a lesson that I learned from those 2 cities that I think should have implication to you for a lot of things. That's why when I teach ethics to governing bodies, I always talk about the prudent man. What's the prudent man? It's your DA or your newspaper publisher. That's the prudent man that you have to think about when you're doing things. That's all you need to know about. That's prudent man. People began to think, well, maybe we ought to look at coming into this business. And the municipal league at that time was kind of desperate for money and so forth. So I remember hearing one time from Stan Alexander that Gary Rader, the mayor of Weatherford, who was president of the municipal league at that time, asked him to lunch and said, we need OMAG to give us $100,000 a year to support OML. And we're going to initiate some new training. Well, I came back and looked at that, and well, that'd be good. Seeing municipal officials trained is a thing we're interested in and want to encourage. So I said, okay, we'll do that. I looked at the program the next year, and they did less training that year than they had done in any year of the past 30. And so the OMAG board said, well, we're interested in training and we're interested in encouraging you to do it, but we need some accountability for the money. It's the city's money that we're getting. And that's one big difference between OMAG and OML. When OML gets the money, it's no longer the city's money. When we got money here, this is the money of the city. That's why we give money back. National American Insurance Company goes to OML and says, we'll give you $1 million if you will endorse us. $100,000 a year for 10 years. And I had been at that meeting, and I had been asked to leave that meeting. And I went out one door, and they came in the other door. And so then we were kind of faced with the dilemma of, okay, here we've got the municipal league endorsing, and how's that going to affect the program? Well, one of the things was we gave up being the OML Municipal Assurance Group and became the Oklahoma Municipal Assurance Group. But you look at some of the old material, it was OML. And it was just the acronym and the agreement. We had to change the agreement and everything. But that was part, separating from OML. And by that time, we had a pretty good relationship with the city. And the league found out that their name didn't mean as much as they thought it did. OMAG represents more cities and towns than OML does. They represent more cities and towns. Their membership number is less than yours. They don't understand. I don't think they've ever taken the time to look at those numbers. And remember, I started out as an OML staff. I'm a league person through and through. But there are things the league should do, and there are things the pools should do in my estimation. NACO tried to legislate us out of business. I remember being in the gallery down there, legislation's working through. They tried to regulate us out of business. Charlie Caldwell and Stan Alexander both made a meeting with the insurance commissioner that probably kept us from being really regulated. Workers' Compensation Court, I had testified that their rule didn't apply to us for group self-insurance because it required joint and several liability. And there was one other factor, I can't remember what it was now. The counties have always operated under that rule in their workers' comp. We never have here, except for there's the deal about schools, I think, for a couple of years and so forth without audits. At one time, National American took away 40% of the business that OMAG had. And that was a very difficult time dealing with the board. You're successful if your numbers get bigger. You're not successful if your numbers are going down. And the board was pretty upset that we were losing business. But one of the things I knew, and others on staff knew, was that financially we were better off because they were getting the bad losses. Because we had developed the rating plan over the years, and I got some men to say that Joe Kennedy and Jack Floyd had come up with an analysis that said there was a correlation between the budget and your liability exposure. So we started out rating only on the budget. And that was easy because the Municipal League had a contract with the state to data process all of the audits that had to be filed with the state. So we had all of that data 1 year old available in the league office. And so we could rate anybody, right there in the office and tell them what their premium was going to be without going out. Because initially it was purely based on their audited financial statement as to what the premium was. They worked out the relationship. I can't remember what it was now. It was the way to do it. And that give a lot of credit to Jill and Jack for doing that. But over the years, with different things had to be modified a little bit, and we got kind of a loss experience, deal. Who's, if people are paying more and are managing good, what do you do? And you begin to learn that a lot of city managers create a lot of claims, and they leave one city and go to another city. That city's going to have claims. The city's going to get better. You kind of just watched where some of the city managers went, and you knew your claims. That didn't account for Bill. That was a good. By the way, I pick at Bill a lot because Bill, how old are we known each other? 35, 32 years. He was a young man, very young man.
He's got it down to the hour number of hours.
By the way, but I give him a bad time. Let me tell you, he gave the greatest tribute and most powerful sermon I've ever heard. Now, Bill, you always do this, man.
Harold, you knew me when I had more hair and a bigger waistline.
There's a picture up there. Shows it. We all saw it.
Very young man. Very young man at that. But because of the rating plan structure we had, we had a lot of cities that were not very happy with us because their rates had been going up. Well, that's who went to National American because their losses were high. So National American, got those bad losses. Our bottom line was improving. Our loss ratio was improving. Financially, we were better off having lost those people. Eventually, 10 years, NACO gave up and went away from that standpoint. But it came back in my memory the other day. By the way, I was asking Susie the other day about the procedure manual, which I understand is, what do you call it now?
Electronic?
No, it's in electronic format, but you call it procedure manual. There is the very first page of the OMAG procedures manual. Back then, we had the little 3-part forms you do on the typewriter. I was telling you about how long ago it was when I came to Edmond. When I started at the city of Pump City, we had 400 employees. We had one copier, one photocopy machine. We spent 6 months debating whether or not we could justify a fax machine. Bill said, I wasn't there at the creation, but it wasn't very long after. Still damn. This actually said, we need to develop office policies and procedures. This is the first contribution to that effort. The OMAG secretary is to maintain a 3-ring binder in which to place any items issued by the administrator which relate to office policy and procedure. For now, this should be placed above the fireplace. You don't have a fireplace in this office. We have not. We have a fireplace. We have holes in the floor.
I was gonna say, can you type that?
No, I type.
Oh, you type it.
I can out-type anything.
Well, I know. Bill's a pretty good typer. He still has this electric back there.
I used to have to take dictation on my telephone on typewriter. Because you'd have somebody covering something out in Elk City, and they call back in, and you had to type it like that, and so forth. So Bill's good. But no, I didn't. But that was the way that the procedure manual got started. So you want nostalgia? You got nostalgia. Workers' compensation plan, 1984. Liability had come along at that time. Workers' comp had been a very common thing in Municipal. I was, being exposed to it in meetings with others around the country. But at that time, the workers' compensation court had developed Rule 15, self-funding of workers' compensation, and I testified that I didn't think it applied to the government entities, but some people, and I can't remember if it was National American or somebody else, we got word that they were trying to form a group. And we kind of got word that they were looking at it as a way to make money, not on behalf of the municipalities. Well, for over 10 years, I'd worked with the state insurance fund to try to get better rates in workers' comp for cities and towns when I was at the league before OMAG. And every time we'd get them to do something, but they'd make another change. We'd come down on this, and they'd go up on this. So 2 years later, we'd find out, we were still subsidizing the private sector. Really. Government was subsidizing private sector under workers' comp and state insurance fund back in those days. So we were paying high. Cities and towns were paying high because we were subsidizing these people. And we knew if these other people came in, they'd be able to come in with lower rates and so forth. So I went to the state insurance fund to talk about coming up with a different program. And there was a really brilliant young guy there named David Galagly, was the commissioner of the state insurance fund, and Jim Sturgio was the actuary. He was from New Jersey. He was the actuary for the state insurance fund. And we three got together and came up with this idea for a funding deal for workers' compensation with a loss fund that they would reinsure and we would administer, and then we'd hire somebody to do the claims and so forth, something that had never been done. Dave Galagly was an interesting guy to work with. He worked on paper whiteboards, and he had 2 of them in his office. He couldn't talk without getting up and writing on the board and so forth. And Sturgio was just a really brilliant actuary. By the way, David Galagly left there, went in the oil business, busted in that. And 5 years later, he got hired by a little personnel organization to kind of, run it. Called Express Personnel.
He's doing okay.
And Bob Funk always says, I thought I paid Galagly too much money because Galagly made Express Personnel. Funk's the guy out front.
Yeah.
Dave Galagly's the guy running it. Dave retired at age 55 and moved to Montana. But they were the foundation for the funding arrangement we came up with for OMAG. It exists no place else in the world. There's no one else in the world that has a program like the cities and towns, the schools and the counties. Now, the schools and the counties, they manipulated a lot more than I think you do here. But it's still the same arrangement as the state insurance fund. And, ComSource. Yeah. That they have, but they do it differently. And every insurance company in the world has beat on Charlie's door to try to come up with a way to compete with it. And now he's owned by the biggest workers' comp carrier in the United States, and they can't come up with a way to compete against what was done here, because it was done as a way to benefit the citizens there. And that's where we got into the loss fund deal and giving the money back to them, giving the interest to them. We were sure glad computers came along. Came out with that program to try to figure out the interest allocations and so forth. We'd have had to have done that manually. And I don't know how many of you knew Howard Favor, who was the original finance officer we had here. Lovely man. He and I used to be professors together at his school. He was the business manager there, not because of me or him. The school had to close and merge with one up in Joplin, Missouri. Howard also had a Christian supply bookstore here in Edmond, so I knew he was the office, he was the bookkeeper or finance office man for the college. And what I want more in a finance person, a guy I have absolute trust in for honesty. Being a minister, and I knew that he knew how to make payroll, so hey, I could get paid. So hired him to come in. He did everything in a dual system. I don't know if he did it all the time, but he never trusted the computer. He did everything. He had a manual system, and he had the computer system. He would never rely on that computer.
Harold,
Yes.
whenever the work comp program first started, do you remember what the split was between the loss fund and the excess? Because we're at 50-50 now.
It was 70-15, and 15 then for claims and administration. I recall. I think it was about 70%.
50-50 now.
So the loss fund
Has dropped.
So what's the reinsurance?
Well, with their premium, it's just strictly excess or loss fund is the only thing we get. We get two numbers
I
there.
think we paid them 15% for the reinsurance.
Yeah. I'm not real
I'd have
positive
to
on that.
go back and look at some old numbers on that. By the way, because of all this, I went on the internet the other day to see, look up Jim Sturgio, the actuary. Right? I had seen him since back in probably 90. And he's still alive. He's about 82 years old. Still head of his actuarial service in New Jersey. And until last year, was still the actuary for the state insurance fund. 42 years he was the actuary for the state insurance fund. So that tells me that, the deal was, how can we come up with a win-win-win? How could the cities win? How could the state insurance fund win? How could OMAG win? And if he was retained as the actuary for 42 years, who came up with the program, that was a win for them. It appears it's been a win here for the cities and towns, and I think it's been a win for OMAG over that period of time. So great guys that we happen to have an opportunity to meet with. Kind of getting to the end, separation from OML. Early on, I recognized that we had to look at things differently because the staff I needed and the staff they needed were not the same. They were a lobbying organization. We were going to be doing not lobbying, and the pay ratios, the pay scale was going to have to be different if I was going to be able to attract the people that I felt that we needed here. And Don Ryder, who was the director at that time, he and I had a good rapport along that line. Unfortunately, he passed away, and things got to be kind of strained, kind of a deal. My belief was cities should pay dues to the municipal league, and they should pay to the OMAG what their insurance costs were. And we shouldn't mix those. Now, I know that around the country, many schools are direct parts
of leagues very successfully. I know the Texas Municipal League pays $600,000 a year to the TML IRP, Intergovernmental Risk Pool, pays $600,000 a year to the municipal league for the right to use TML in their name. And the TML offices are in a building owned by the municipal league. Same thing with the Texas Association of School Boards. Take TML IRP, by the way, has 250 employees. They're the largest. There are only 3 pools in the country that have more than 100 employees. And 3 of them are in the state of Texas. Huge programs down there. But in 1985, we began to look at separating and having our own employment force, our own payroll, own benefit program, and so forth. And it was really a very difficult time. It was very, very frustrating to me because the OMAG board was very committed and very understood the issue. But whenever we would try to work with OML and the OML board, they just didn't seem to care. And I said at Pam's event that the thing that she told me back then, her observation was that service on the municipal league board was an honor. Service on the OMAG board is a duty. You don't come to OMAG boards to be entertained and to be amused and to learn what's going on at the Capitol. You come to OMAG board meetings, you come to work. You come to make decisions. Hard decisions. I was on the municipal league board here. I was on the municipal league board in Tennessee. And it is. I hadn't thought about it until she mentioned it. You go there to learn what's going on. Get the ins and outs of why things really happen at the Capitol. Why did the Attorney General resign the other day? You get the inside on that. You don't make the hard decision. And so it was very difficult to work through that process. I remember we used to have meetings, 2 or 3 of the OMAG board meetings, 2 or 3 of the league people would meet at a cafe in Stroud and kind of hammer out details and so forth. How we were going to do the separation and so forth. So we did. We finally separated. We were in our little house. This is the 6th location that the OMAG offices have been in. We started out. How many of you have been to the municipal league building? Okay, you go in. There's a receptionist there, and then behind the receptionist is you probably have never been back there.
No, but I've been.
There's a storeroom back there. That was my office. That was my office there. And then I got to move upstairs for a while. And then they had a little house on the corner. It looks just like the little houses across the street. There now. They had bought it, been torn down. The parking lot's been extended out over it. And we moved over there. There's a couple pictures in here of that. It had holes in the floor. You could see the ground on the floor in Stephen's office over there. There were about 5 or 6 of us, I think, in there for a while. We moved up here to Broadway Plaza building. That's now Delta Dental, 63rd and Broadway. Frederick James at that time in Sedgwick was out on Northwest Expressway. Eventually moved into that building. We were kind of outgrowing that space there. Needed more space, so we bought a building down on Lincoln Boulevard. 2 weeks later, the building next door went up for sale, and I said, "Well, gotta look. It's next door. You gotta go see what's over there." Went over there and I thought, "Oh, this works better than the other building." I took a big gulp and came back to the board and said, "Hey, how would you like to buy another building?" And they took a big gulp. I said, "No, okay, but you got to get rid of that other building."
Which side were you on, north or south?
We were on the east side.
Oh, the east side.
East side.
Okay.
4130.
Right.
4130. Yeah.
Right.
Through there, it's a brown building. They've changed it all. They used the Oklahoma Republican, the Oklahoma Democratic Party.
Yeah, they were in the green building. Yeah.
We were near.
The building we bought first.
Okay.
We actually had a tenant in there that we were getting 8% interest on our money.
There you go.
From the tenant that was in the other building. So we kept it for a number of years. and finally sold it, and then totally renovated. The other building was owned by General Motors Acceptance Corporation. It was built, that's where you go to have your car, get your appraisal on your car and so forth. Was there, so we redid that, and we're there for a number of years. We had the total open concept first. You heard some of them talk about it. We had several staff discussions, but that was the rage then. We went around and looked at a lot of things, but there was no private office in there until Pat was hired, and he turned one of the conference rooms into a private office. But everything was modular, and I've got the original plan in the book here for it. And I liked it personally. Worked well for me. It was the only time I ever had something like that. But so we, at that time made that full separation. I've always dreamed that we're just right east of the OML building. There would be a 6 or 7 story building that OMAG would own there, that OMAG would be in, that OML would be in, that Municipal, whatever it's called now, would be in, that OMRF would be in. There'd be a restaurant. There'd be a full-time private full-time copier and mailing service, tenant in the building and so forth. Nobody ever asked if I had an idea. 6. Okay, two clothing items that I can't not mention. Lloyd Render and Bill Tank. And I use names. I'm not this guy and that guy kind of deal. I was looking the other day at a deal with Stan Alexander wrote about my 2 mistakes in hiring PhDs. I first hired the training director for the Oklahoma Highway Patrol, who was our first training director, Jim. I can't think of his name now, but Dr. Jim Roberts. And he was the head of training for the Highway Patrol, and he didn't work out at all. And I hired Edwina Trout. Edwina Trout, who was with the city of Oklahoma City.
Yeah, Monica and I know her.
I know her.
And
I worked with her.
Edwina was from Oklahoma City. Her uncle, I worked for her uncle when he was married. Oklahoma City, and I'd gone to school with one of her cousins. And so I hired Edwina. And then later, a young man named Lloyd Render got elected to the board. Lloyd had been the personnel director of Oklahoma City. Then he'd been city manager at El Reno. Then he'd been city manager at Chickasha. Then he'd been city manager at Zucker. And he got on the board. He was unusual. And he talked to my fellow board members. Now, my fellow board members, anyway, the board members kind of got together and they thought, maybe the best way we could nullify this guy, we will make him chairman so that he just presides. He doesn't speak. And so then we were doing training meetings around the state. We'd go around to the and Lloyd would show up just before lunch and say, I'd like to say something. What am I going to do? Say you can't? Well, he would give what I call these messianic speeches. He had been wandering in the desert years and years, cultivating his ideas about how to save municipal government and so forth. And he would lay that plan out to people. He did that about 4 times. Then one Tuesday, I got a call from him. He said, I'd like to have lunch with you. I'd like to meet you sometime. Talk about something. I said, well, how about tomorrow? He said, okay. So we met at Chickasha. And we talked for a while. He said, I've been on the board for 2 years now, and I'm a change agent. That's why I was hired at El Reno, about change. And I was so successful there that they hired me at Chickasha to bring about change at Chickasha. So successful there, they hired me at Duncan to bring about change. And I've been looking at OMAG for 2 years, And I don't see anything that needs to be changed. So you need to go. Because I got to bring about change. And I kind of looked at it. And he offered me a pretty good deal. Thinking about, not as good as Lincoln Riley got, but he offered to go to the board and put up $2 million to fund me in a separate position. Because I had this wild idea back then that I could take a computer and I could create job descriptions with a computer and save everybody a lot of trouble. So he was going to fund me to do that. Well, anyway, I kind of thought, well, that's not really what I want to do. So we were getting ready for the next meeting, and about an hour before the meeting starts, I get a phone call and it says, Mr. Pumford, you don't know who I am, but I'm a friend of Bob and Judy Hicks. Bob's my best friend. And an effort's going to be made today to fire you. Please do not quit. Please do not resign. And so the board members start coming into the meeting, and I am looking at everybody. Who is talking with who, and what are they talking about? Because my termination was certainly not on the agenda. And suffered through that meeting, and nothing came up. And on the way home that night, I stopped by to talk to Bob and Judy Hicks to find out who was their friend that might have called. And we deduced it was Lloyd's wife that had called me, and that he had thought he was going to pull off something like that. Well, the next two board meetings, I had the privilege of writing an agenda that called for consider the termination of employment of Harold Pumford as Chief Executive Officer of the Oklahoma Municipal Church. There's nothing more exciting than writing an agenda like that, let me tell you. And made it through both of them. At one of them, I knew we had some problems on staff, and I had a staff meeting with Stephen at both of them. We had the first staff group come in and we met with them. They went out, and the next group came in. I divided the group up, and I turned on a recording machine. This is who I am. Mr. Reel's here. And these are the other people in the room, and so forth and so forth. Told them, I said, I'm going to be around. But I perceive that some of you may not want to stay. I'm going to make you an offer. I'll give you 3 months severance pay if you resign within the next 5 days. And one person did. Atlanta didn't. Atlanta was having an affair with Lloyd. And Lloyd ended up going to Florida. And the city manager down there, Atlanta left, and later on, I terminated one of the other people that did not take me up on that when we were creating the new position that Gary McKnight had, and this person was doing our investments. I did the investments to $25 million. At that point, I hired an investment manager to come in, and then we were looking at changing things around. And this position, and I've made it known, this position would be terminated if this person didn't advance on. And we went out and we hired a guy, Jeff Fuquay, who has a law degree and a degree in psychology, a doctorate, to manage the selection process. And she wasn't selected. She was a real good friend of Atlanta's. So she sued for wrongful termination. I had your mother subpoena Lloyd's wife, and 2 days later the case was dismissed. Never heard of it again. Bill Tackett used to be a young guy that was out of college and went to work at City of Okmulgee. The city manager of Okmulgee who had a vision problem. And needed someone to drive him when he would come to the city. So Bill first came to meetings as a chauffeur. I like to tell him, remind him all the time. For Dave Harris, really, really fine man, really great man. And then later on, went to Shawnee created a lot of claims for us. Shawnee.
Helped put me through college.
Bright red. I guess that'll work.
Then to Woodward, then he went down to Texas. By the time I had left here, I'd been at Prima. We had a group of people starting back in about 1980 that were in pooling. They got together and we had a little deal called the pooling section. And years ago, I'd been president of that. And as we'd gotten bigger and bigger and bigger, and we had greater needs. And Prima, it was sort of like Illinois. And Prima just wasn't set up to meet those things. And we had looked at starting another organization. And we 6 of us put up $100 each to fund a mailing list to organize a meeting, which ended up being in Oak Brook, Illinois, in January of 1988, as I recall. At that time, the OMAG board was trying to correct my behavior, and they had sent me to a 1-week improvement course down in San Antonio, $5,000 tuition. We analyzed a whole bunch of psychologists to help me decide who I was and what I wanted to do when I grew up. I decided I wanted to be just what I was. And so I wasn't able to go to that meeting, but I wrote a paper. And one of my friends up in Kansas read that paper. And that became the foundation for creation of AGRIC. And at that, we called it the Oak Brook Assembly. And in absentia, I was elected as vice president of a group that was appointed to come up with bylaws and dues and everything like that. And we used to meet about every 6 weeks. We'd fly into a town on Friday night, meet on Saturday, fly out on Saturday night, come back home, really diligent meetings and so forth. Got it going, and I was happy to have been a part of that. I've been president, and I wanted to see it go forward and so forth. They began to start looking around for staff, and they hired a consultant, and the consultant called me one time and he said, they don't know it yet, but you're the person they want as their executive, as their CEO. And they were looking for the pooling yellow, they said. Well, I've never seen those movies, but I had deduced that was the most intellectual, most informed person. My grandchildren tell me, no, Grandpa, you're just the old man. And so eventually I got a call that would I consider the opinion of the position. I wasn't interested in it. I was fat and happy here. I had been here 20 plus years, and I thought 20 other years would be great. And after leaving, I realized I really wasn't as happy as I thought I was. I really kind of believe now you should never have a job more than 10 years. So take another position. No. If you don't get some kind of movement, you really get kind of tired. Hope you've been here longer than 10 years. But so I was given the opportunity to go there and create that organization. Left here on Friday, January 31st. On Sunday, my wife and I got in our van and drove to Lyle, Illinois, and picked up the files there outside of Chicago. Then drove to Livonia, Michigan, in Detroit. Picked up a group of files there. It was being operated by 2 people at that time. Drove all that back to Great America. And got set up, worked for about 4 or 5 years. The program got bigger. Needed to hire somebody else to come into the program. And ran into Bill, and I thought, that's the kind of guy that I need, somebody that knows cities, somebody that's been on the boards and so forth. So Bill came and worked with us for 5 years out there. And so Bill has really more pooling experience than about anybody in the country. What are your questions, folks?
Well, and that's now called AGRIC.
AGRIC, yes. AGRIC, the Association of Governmental Risk Pool.
You left out an interesting story. I know we still have a little bit of daylight left, so. But you need to tell the telegraph story. that you were prepared to send before Charlie.
Yeah.
You got to tell that story.
1983 or 1984, somewhere in that period, the insurance industry would not insure public entities anyplace. They would hardly insure anyone. My wife used to have a business, and one of my rules about the reinsurance industry and the public sector is the Foley rule. If you've ever studied accounting, you know inventory is LIFO and FIFO. You value inventory by last in, first out, or first in, first out. Well, in the insurance industry, reinsurance, there's the Foley rule: first out, last in. And that applies to municipal government. We're first out and we're last in when the insurance industry constricts on a reinsurance standpoint. We'll be the first out. So I used to always tell my wife, she'd say, hey, I'm getting a 20% increase. And I'd say, you better take it, because it's going to go up to 30 or 40 if you don't take it, because we're already experiencing this. And there's a Time magazine article, a headline that you can see in certain places that says, America, your insurance has been canceled. And I mentioned earlier, the Lloyd's of London, it's North America. It's not states or industries. Are we going to insure North America? But at that time, virtually no one would cover pools. And we were faced with the prospect in late December of not having any reinsurance or excess insurance. And we had a board meeting, and I think it was like 2 days before Christmas, or maybe it was 2 days after Christmas. I don't remember exactly, but it was in the very end of December, and the board had decided that they weren't going to take the risk of saying to cities and towns, we can, you say cities and towns if you ever work for the municipal league. That's the only people that say cities and towns. People work for the municipal league or that work here. Everybody else says cities. But we're not going to take they were not going to mislead the cities and towns and say, we've got you covered. We don't have you covered because we didn't have the reinsurance. And at 4:00 that afternoon, I started writing a telegram that Bill refers to, that we were going to have to be sending out in every city, 400 plus cities and towns, saying to them that we were not going to be able to provide their insurance coverage for them effective January 1. And at 7:00, Charlie got a teletype from Lloyd's saying that he had a glimmer of interest in writing coverage. And I don't know how many of you know how they operate at Lloyd's. I've never been to Lloyd's, but if you've ever been out to Cedric's or to Charlie's office, he's got a bench there that is an underwriting bench. It's actually from Lloyd's of London, in the old building they had. But the deal in Lloyd's, you get a slip from Lloyd's on the back of the policy, and there's something on file here, and it's got a lot of initials and has percentages out behind it. You go to the lead underwriter, you go to his table, you go to the lead underwriter, and you get him to agree to provide the coverage. And he'll say, okay, I'll take 27%. And he'll put his initials down and 27% behind that. And then you go to the next person, the next person. And based on that person saying, okay, I'll do it, then the next person is going to say, okay, I'll buy into it. And the next person, and the next person, and the next person, and the next person you go to will say they'll buy into it. And all they need to know is that this guy up here said, okay, he would do it. And you keep doing that until you get 100% subscription to your document. And if you look in the files that somebody has here, you can find a couple of those. So probably about 9:00, we had enough that we were able to say we can go forward. We never had to issue that telegram. If Bill didn't talk about it, nobody would know it today. We were that close to having to terminate
What year was that?
83, 84 period of time. Might have been 82. I have to go back and time back. But it was, it wasn't just us. People across the country have been in that situation. And that was, we were really, that we struck, that for the first 5 years of the liability plan. It was long, long days and very, very tough times back then trying to do the funding. But the board stayed around. I say, that became the duty thing. The board had to stay around to see, what was going to happen. How far could we go? Thanks for reminding me of that, Bill. Any other things you've wondered about?
Who were the first couple of cities that joined the pool?
Sorry, say again?
Who were the first couple of cities that joined the pool?
Why you asking that particular question? Well, no, I wasn't here. So in 77, I'm sure the Village and Choctaw. Village and Choctaw, because they were the two signatories to the agreement, coming in with the health into the health plan, and we had at that time. Now, Floyd was Floyd? That wasn't Floyd.
In 77, no.
It was Roughton. It was Roughton.
Bill Roughton, yes.
It was Bill Roughton. That's right. It was Bill Roughton. I think he was the city manager there at that time. Again, I'll leave you. Any other questions? Thank you very much for the opportunity to do this. Leave you with two things. Again, my favorite phrase: if you are wise enough to value useful reproof over treacherous praise, and remember, it's not whether or not to buy your coverage from OMAG. It's whether or not you continue to cooperate with your fellow cities and towns for your mutual benefit.